What if the phone in your pocket, the apps you scroll, and the servers storing your data are quietly connected to some of the world's oldest religious institutions? Not through sermons, not through prayer, but through money. For centuries, churches have been seen as spiritual centers, places of worship, charity, and moral guidance. But behind cathedral walls and monastery gates, a different story has been unfolding. A story of investment portfolios, venture capital exposure, hedge funds, and stock market influence. And here's the mystery. How did institutions founded thousands of years ago become financially entangled with Silicon Valley, the epicenter of artificial intelligence, surveillance, capitalism, and digital power? But documented patterns, financial structures, and incentives that quietly connect faith institutions to the world's most powerful tech companies. And the deeper we go, the stranger it gets. Most people imagine churches surviving on donation boxes and weekly offerings. While donations still matter, modern religious organizations operate more like financial institutions and charitonial organizations. Globally, religious institutions control hundreds of billions of dollars in assets, land, real estate, equities, bonds, endowments, and private investments. Some own farmland larger than small countries. Some manage investment arms staffed by Wall Street professionals. Some quietly operate hedge fund-style portfolios under non-profit legal protection. This isn't new, but what's new is where that money is flowing. Over the last 2 decades, Silicon Valley became the most profitable investment zone on Earth. Tech stocks outperformed traditional industries. Cloud computing, social media, AI, and digital advertising reshaped global wealth. And churches noticed it not because they wanted to build apps, but because they wanted financial stability, growth, and long-term sustainability. The problem, once you invest in big tech, you don't just earn returns. You become connected to systems of data collection, algorithmic influence, automation, and political power. That's where the story truly begins. Let's rewind. For most of history, religious wealth was stored in land, gold, buildings, and donations. But during the 20th century, something changed. Inflation eroded cash, savings. Governments created complex financial markets. Stock exchanges became the fastest way to grow capital. Large churches began creating investment arms, legally separate entities designed to manage funds professionally. This allowed them to preserve donation value, fund future operations, expand global missions, protect against economic downturns. Over time, these investment officers adopted the same strategies used by pension funds and universities. They entered index funds. They bought tech stocks. They followed market benchmarks like the S&P 500 and Nasdaq at first. The exposure was indirect. But as technology companies exploded in valuation, religious portfolios followed. And that's when quiet transformation began. Between 2005 and 2020, companies like Google, Apple, Microsoft, Meta, Amazon, and Nvidia multiplied their market value many times over. Investment managers noticed something important. Tech stocks weren't just profitable. They were becoming essential to economic growth itself. So institutional investors rushed in. Universities, sovereign wealth funds, pension systems, and yes, church investment organizations. Here's how it usually works. Religious institutions don't directly buy Google shares in secret meetings. Instead, they invest through index funds, mutual funds, private equity partnerships, venture capital exposure, technology-focused. These vehicles automatically allocate money into the biggest tech firms. And the result, without publicly advertising it, church money becomes embedded inside Silicon Valley's financial bloodstream. Some religious funds also gain exposure to startup ecosystems through venture funds that finance artificial intelligence, biotech, fintech, and surveillance software. Another hidden layer, asset managers trained on Wall Street. They operate under performance metrics, growth targets, risk management, which means the same financial logic guiding billion-dollar corporations also guides church portfolios. The pressure becomes obvious. If we don't invest in tech, we fall behind. So they invest. Not necessarily because they love Silicon Valley culture, but because the market forces push them there. And once invested, they shape behavior, politics, mental health, surveillance systems, and information control. Algorithms influence elections. AI systems replace human labor. Social platforms monetize attention, addiction, and suddenly, religious investors face a dilemma. But should institutions built on moral authority profit from systems accused of data exploitation, psychological manipulation, political censorship, mass surveillance, labor automation, displacement? Some church leaders began raising concerns. Others argued, we don't control company behavior. We're passive investors, but money still enables expansion. Ownership, even indirect, still fuels corporate power. And that tension created cracks inside religious finance strategies. The public didn't see it, but insiders felt it. As portfolios grew into the billions, transparency became harder. Some investment arms avoided public disclosure. Some used complex legal structures. Some separated financial operations from public religious leadership. Not necessarily illegal, but intentionally quiet, because many believers would be uncomfortable knowing donation money might be tied to tech giants accused of ethical violations. This created trust problems. When leaks and reports surfaced, even partially, backlash followed. Members asked, where exactly is our money invested? Who controls it? Why weren't we told? The financial success became a reputational risk. Risk exposure, economic forecasts, leadership meetings begin including financial strategy alongside theology. The institution becomes partially tied to Wall Street behavior, which means when tech stocks crash, religious wealth grows with it. But inevitably, when financial relationships stay hidden long enough, they don't disappear, they explode. As investigative journalists, non-profit watchdogs, and leaked financial reports began exposing institutional investment patterns, public trust started cracking. Believers weren't angry simply because churches invested money. They were angry because nobody told them. Decisions were made behind closed doors. Moral language was used publicly while financial strategies remained silent. For many followers, it felt like betrayal, monetizing personal data and influencing political outcomes. The contradiction was impossible to ignore. And once the public started paying attention, church leadership could no longer stay quiet. The most common defense used by religious investment managers was simple. We don't control these companies. We just hold shares. Technically, this is true. But financially, capital stability, market legitimacy, shareholder voting rights, corporate growth fuel. Even passive investing strengthens corporate power structures, critics argued. If churches truly believed big tech practices harmed society, why continue profiting from them? The answer wasn't theological, it was financial. Divesting from religious investors are now indirectly exposed to AI surveillance tools, facial recognition companies, data mining platforms, predictive behavior algorithms, military-adjacent tech infrastructure. Once again, returns outperform ethics, and the cycle continues. Here's something most people don't realize. Even without choosing tech, they still own it. This creates structural dependency. You can't easily exit without abandoning mainstream financial systems. And that's the trap. Here's the uncomfortable chain reaction. More tech investment gives higher returns, gives larger institutional budgets, gives increased dependence on market growth, gives reduced willingness to challenge tech power. When organizations benefit financially from systems they might otherwise criticize, their voice softens. But because economic survival changes behavior, it happens to governments, it happens to universities, and yes, it happens to churches. Money rewires incentives. This story isn't really about one church, it's about how all institutions become absorbed into financial capitalism. Hospitals invest, universities invest, charities invest, non-profits invest. Everyone becomes part of the same economic web, and Silicon Valley sits at the center of it. Technology is no longer just an industry, it's the infrastructure of modern civilization, which means anyone trying to survive financially eventually feeds into it. Some believers assume if churches own tech stocks, they can influence tech behavior. In reality, they usually can't. Large corporations respond to incentives. It only equals Tech platforms host religious communities. Both sides grow dependent on each other. The line between spiritual institution and digital corporation becomes blurred. 3 clear takeaways. Let's simplify everything into 3 powerful truths, whether people like it or not. Large religious organizations operate in global financial markets. Takeaway number 2, passive investing is not morally neutral. Even indirect ownership fuels corporate expansion. If you want growth, you follow tech. Once you follow tech, but belief systems, information flows, and digital communities, will religious institutions challenge that power? Or will they remain financially tied to it? It will affect meaning itself. Like this video so the algorithm pushes this conversation further. Comment below. Should religious institutions fully divest from big tech, or is this financial entanglement unavoidable?